6.5 hours of trading, and the S&P moved 0.68 points. Open to close, a textbook doji, parked right under the gap fill. Underneath that calm, the Nasdaq round-tripped almost 600 points and still finished nearly flat. That's your session. We close on the system's top-ranked stock and ETF from best of best. SPX filled the downside gap and closed just under the gap fill level on a doji, open and close less than a point apart, pure indecision all session. The Nasdaq got there the hard way. It shed almost 600 points from its high, clawed back more than half, and still closed down just 0.28%. Neither chart committed, and breadth coming in weaker, with a bearish junk bond divergence, adds more cracks under the surface. Softer PPI data and some dovish remarks from the Fed pulled the 10-year yield back toward 4.5% today, and the dollar slipped below its key pivot. TLT has been recovering, extending the bond bounce off recent lows. That said, longer-term rate risk hasn't gone away. The upside case for bonds holding this move is still contested. WTI held near $80 resistance, but XLE slipped just under 1% for the session. Energy's story is a clash right now. Supply shock bulls are eyeing the Strait of Hormuz situation, while futures markets are pricing this as a temporary geopolitical disruption. The chart and the macro narrative aren't aligned. Crude's behaving like the market isn't fully buying the supply shock thesis. Gold is holding its support pivot, but stalling just under resistance. It's been consolidating for more than a week without a clean break either way. Silver and copper are both leaning lower under dollar and rate pressure. The dovish shift in the dollar helps the setup, but metals haven't broken out, and that tug-of-war is still unresolved. Developed markets split today. EFA caught a bid on the inflation relief from the PPI data, while Japan's EWJ slipped a fraction, giving back part of its recent run. Taiwan steadied. EWT added 0.6%, stabilizing after the sharp 4% drop it took earlier in the week. Same macro data, landing very differently by region. Bitcoin sitting near 65,000, and IBIT pulled in 87 million in inflows today. That's a real signal of demand. But the technical picture is telling a different story. BTC is in a confirmed downtrend, with the Ichimoku cloud and key moving averages acting as a ceiling on this bounce. The system's reading this as a counter trend wave, not a new leg higher. So the flow data and the chart don't agree right now. The best of best scan has filtered the market down to 116 symbols right now. What's interesting is where the signal is concentrated. Healthcare is the top-ranked sector, while technology is sitting at number 3 and lagging. That rotation away from mega-cap tech and into healthcare is something the scan has been picking up as it builds. The sector board has a clear read today. XLV, healthcare, is number 1 and leading. XLI, industrials, comes in at number 2 but is in lagging territory. XLK, technology, rounds out the top 3. Also lagging. Healthcare, standing alone at the top of a defensive-leaning board. That's the system flagging a visible sector rotation. The number 1 ranked ETF in best of best today is XBI, the SPDR S&P Biotech ETF. It posted a 0.5% gain on the session, while the tech sector was sliding. Biotech at the top of a healthcare-led board, on a day when mega-cap tech was under pressure. That's a divergence the scan surfaced for a reason. On the stock side, QLYS is number 1 in best of best today. It's a cybersecurity name, and it pulled back nearly 3% on the session. The scan is still surfacing it at the top of the shortlist, despite the down day. That kind of structural setup is exactly what the system is built to flag. Here's the day's readout. SPX held a near-perfect doji at the gap fill, 0.68 points from open to close, while the Nasdaq round-tripped almost 600 points and finished nearly flat. Macro got some relief with yields pulling back, and the system's best of best is flagging healthcare at the top of the board. XBI on the ETF side, with QLYS, a cybersecurity name, leading the stock rank. Energy and metals stayed defensive, and crypto's bounce is still hitting overhead resistance. Verify both live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.